All right, guys, back to work tonight, Wednesday evening, March the 10th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a jam-packed video in store for you guys tonight. Charts are all ready, as you can see in front of us. The E-mini's ready. The Nasdaq is ready. The gold is ready. Glad to see you are ready here as well with me. But here's the big question for tomorrow. You know, the House just passed that $1.9 trillion, don't call it a bailout, stimulus bill on Capitol Hill. It'll be headed to President Biden's desk tomorrow for full approval. Here's the big question. How will the markets react to that big $1.9 trillion stimulus package? Will this be a sell the news, where the markets sell off and rally tomorrow? Or will this be a buy everything, YOLO it all, and back to all-time highs? It's tough to tell. You know, the market may pull back for us with a sell the news moment, or we may see this thing ripping higher here tomorrow to go back to those all-time highs, or in gold making monthly highs. And of course, in tonight's video, we're going to break down the best ways to trade pretty much whatever we get tomorrow. If it is a sell the news moment, how to buy those big pullbacks. And if it's a ripper going higher, we'll talk about breakouts, talk about how to buy this markets right as it goes higher. So we're going to cover all the bases here tonight because anything is possible as we go into Thursday's trading session. Now, before we jump in and get the video going tonight, I just want to make sure to remind you, if you haven't done so already, make sure you subscribe to our YouTube channel because, as you know, we publish these video newsletters every evening with our best trade ideas for the following day. I want to make sure you don't miss tomorrow night's video newsletter. So go ahead and make sure you subscribe to our YouTube channel. And when you do, hit that little bell icon so you always get notified every time I publish something new. And as always, if you have any questions for me, you can always drop those questions for me down in the comments section below. I'd love to answer all your questions, so don't be afraid to ask questions. And if you like the video tonight, as much as I like making it for you guys every evening, if you enjoy this video, please make sure you hit that like button, hit that thumbs up button for you. Make sure you subscribe, and I always appreciate you guys tuning in every evening on this video newsletter. But enough of the introduction, though. Time is ticking. It's a Wednesday. Thursday is right around the corner. And again, we're getting ready to see the reaction tomorrow, or I guess this evening, for this $1.9 trillion stimulus package. Now, the markets are pretty much all at extremes. The S&P is running into overhead resistance overhead. The Nasdaq is pretty much just below those extremes from today. And of course, gold, right? Really battling on gold. So we're kind of sitting at these major tops, right? Lots of resistance overhead. And so it's a relatively simple plan going forward. I'd love to buy a big dip, right, on the S&P, big dip on the Nasdaq, big dip on the gold, right? And that we might get something like that tomorrow. You know, a lot of times we see some big news events that come out and they look like such good news, right? But the market sells off. And so we may see that sell off in the overnight, early tomorrow morning, and have to kind of pick up, right, late tomorrow and run that sucker back higher again. So I want to make sure you're ready for that. At the same time, though, with this overhead resistance, you definitely want to be ready for breakouts, right? Breakout patterns. So we'll talk about breakouts and how to avoid those head fakes, those fake out breakouts. So we got a lot to cover here tonight, right? The buy side, obviously the pullback side, the breakout side, and we'll talk about reversals as well, because tomorrow is setting up to be a very, very busy day in our trade room and hopefully a very successful day for you. Now, before we jump into the charts, though, let's make sure we check our news here for tomorrow. Tomorrow, of course, is a Thursday. Now, as I mentioned earlier this week, we are in the second week of the month. There usually isn't a lot of scheduled news this second week of the month. We do have some big news tomorrow at 8:30 Eastern Time. That is kind of the big news of the morning tomorrow. But be aware, though, there's a lot going on right now. Again, we got the House passing the amendments, right, of that $1.9 trillion COVID stimulus. That now heads to Biden's desk for signature. So that's going on in the background, right? That's going on in the background. Tomorrow is also the ECB announcement tomorrow. That'll be around 8:30. So just like the FOMC announcement, it'll be an announcement at 8:30 tomorrow, 8:30 Eastern Time. And then you'll have Draghi's press conference, right? Back and forth Q&A there. So be aware of that. If you're trading the pre-market tomorrow, 8:30, really usually it's between 8 and 9:30. Markets like the euro, gold for sure, will definitely be a little more choppy, a little more grindy, right, around that ECB announcement. And then also, too, don't forget, we're watching for E-mini roll. It doesn't look like the E-minis are going to roll over tomorrow, so we'll cover that again tomorrow night. But, be aware, the E-mini rollover can happen almost out of the blue sometimes, so keep your eyes on that. We're currently on the 0321 contract in the E-minis. Be watching to see the 0621 contract, right, from March to June. We'll see when that rolls over next for tomorrow. Probably not tomorrow, looking more like Friday, but we'll be keeping an eye on that on the E-minis, right, the S&P and the Nasdaq. So as you can see, there's only one small news report tomorrow, that 8:30 jobs, that jobless claims. But again, there's a lot going on out here right now with the ECB, the rollover, and of course this big stimulus package. So lot to look forward to as far as some good opportunities based on the reaction to these news events here tomorrow. One quick note: next week is quadruple witching, the third week of March. I try to take some time away from the desk during those third weeks of March, right? It's also known as kind of like a trader's spring break, if you will. There'll be no newsletter next week. We'll come back, of course, the final week of March, and we'll talk about the plan for trading quad witching tomorrow morning in our trade room, right? So be sure to join me tomorrow morning and every morning at 8 o'clock Eastern Time in our trade room as a member here at School of Trade. So now you guys know kind of the lay of the land, a lot affecting these markets for tomorrow. Let's break open some charts here. S&P's ready, Nasdaq's ready, gold is ready. Let's get these suckers ready to go here. So as you can see on the S&P right now, we pretty much got what we expected in last night's newsletter. We expected that snap back up to retest the high. And as you can see, we haven't done very much, right, since then. Market's kind of grinding sideways. At the very least, I would say it's a trading range, a bull market into a trading range. At the very most, I would say it's setting up to be a spike in channel, right, as it kind of rotates up to those highs. And I think the most obvious thing in this chart is it just looks like one of those bullish triangles, right? It's like an ascending triangle, kind of. You know what I mean? There are obviously double tops, triple tops up top, and then higher lows down here. So it's very easy to assume there may be a breakout coming going higher. But as you can see, you can't exactly predict when those breakouts are going to be successful. So that's the big challenge. That's the big challenge. When I look at this chart, the first thing that comes to mind is there's no sense of urgency in this market right now. For example, when we saw this big blast higher here earlier, right, that creates that sense of urgency that nobody wants to miss out on the pullback, right? There's this FOMO that comes into the market whenever you see a strong move in one direction. Well, as you can see, they took out those highs already. So now there's really no FOMO, besides, of course, this stimulus bill, right? Maybe that will cause some FOMO there. But when I look at a market like this, a chart like this, I think, where would the buyers be excited right now? There's nothing really getting the buyers very excited. We're right up around these highs right now. So in my eyes, in order for me to get some buyers get their juices going again, we have to do one of two things. We have to either break out to the highs, right, and create some sort of tension, right, some sort of FOMO in the market that would give me a reliable way to buy a pullback, right? I got to get this market giving me something to react to. Or if we don't get that breakout higher, we need to attract more buyers by doing what? How do you attract more buyers? You got to get lower prices. So we got to get down below those lows to attract more buyers. We see these a lot in our trade room where you get this strong move. They obviously want to come back and retest that high. They get it, and now what, right? Now where do we go now? Do we break out higher, or do we get, hopefully, a really deep pullback going lower? So that's the scenario we're in right now on this E-mini. Now, the ideal situation would be a pullback. And if we get a pullback, thinking of it as a range environment, whenever I have a trading range, I always want to find levels of support, like expanding triangles or prior swings, right? I want to find those areas of support so I can buy, right? So I can buy the pullback around levels of support below that trading range. Now, like we've discussed quite a bit so far this week on this newsletter, if I get a relatively deep pullback, but not too crazy, I'll be able to use one of my favorite setups, a failure into a pullback combination. right? So we're basically looking for the price to pull back, and it'll probably look like something like this, right? We pull back below the moving average. The bears, they try to get short, right? Running back down to those lows. It's not a bear market, and they fail, and we can buy into those stop losses. Then the market goes up over, and we get a chance to buy it again on that first pullback, right? Classic situation of a failure into pullback combination. Again, specifically at support levels below the range. But as I mentioned before, we've got this news event that came out, right? This stimulus package. And so don't be surprised if this market goes up and then jackknifes right back down. It's not difficult to think that every speculator out there might be buying the open here as we go into the Globex Open in Asia, which may produce a trap high and a shot back down again, right? This happens a lot whenever it seems like the news is too good to be true. You know what I mean? It's a weird game the news plays, right? It isn't always, you don't want to take the news at face value. A lot of times good news is actually processed as bad news, right? Once the markets actually rely on it. So whether or not we go up and back down or whether we just shoot back lower again, I do want to be open-minded to be a buyer down here. But what's the concern? Location is great, but momentum isn't that great, right? This will feel very bearish. And so in that situation, now I have another one of my favorite combination setups, and that is a nested failure with the bears trying twice into that hidden channel pullback on the way over, right? This is one of my favorite setups right now. And that is, again, when the market gives you that deep pullback, again, I would expect buyers are going to be trying to buy down here. But at the same time, though, all of that momentum, you want to give those bears the benefit of the doubt whenever you got that strong of a pullback. Let them try twice. Right? I can buy off that trend line support. I can buy off into those stops. And of course, one of my favorite ways to do it is to buy that first pullback off that channel. So a nested failure into a first test is the best test, hidden channel pullback. All right? So those are some ideas there as the market pulls back. Now, you're probably wondering right now, okay, well, at what point does this market turn bearish? At this point, if we can get down into these support levels, and if those bears can actually hold that pullback and run, well, now we know the market's bearish. But remember, it's not enough to get a strong pullback, right? A strong pullback is not enough. For example, look left. A strong pullback is not enough to reverse the trend. So we have to wait for that, what we call a 1-2-3 reversal, or a 1-2-3 breakout in this case. And at that point now, with the bears in control, now I can start to structure my entry, mark the lows, mark the highs, and we look for that short off the high of that new hidden channel. Now, obviously, we're not just going to blindly sell the top of that channel. I'll be looking for patterns like buyer failures, right? Bearish pullbacks, bearish strength moves, and of course traps, right, as we go. So if you imagine us zooming in on the high of that channel, right? Think about those buyer failures into pullbacks, into strength, into traps, right? We call this the price action cycle if you're a client of mine, right, in the trade room, right? So failures, pullbacks, strength, and traps. Now, don't forget, guys, obviously I can't cover all of these specific entry setups that we use every day in our trade room, but if you want to get more examples of all of these specific entry patterns I'm talking about, they're all covered in the free trading course. I'll put a link up there for you in the upper right-hand corner. If you haven't done so already, make sure you grab that link. Make sure you register for the free course. Then that way, the next time I say 1, 2, 3 reversal into hidden channel pullback, you'll know exactly what I'm using to actually trigger these specific entries off the high of that channel, right? We'll be able to make more progress working together every evening on this video newsletter. So grab that link that popped up there. Pause the video. I'll be here when you come back. Definitely grab that free trading course, though, if you want to learn more about these specific entry setups I'm talking about here in this video. Now, we know the market might be ranging, so I want to stay out of the middle. It's one of the most important parts of a range, right? Same thing, if the market goes sideways, not much changes, right? Trying to buy those dips. And then how do we trade this thing as it goes higher? Now, there's a lot overhead. You'll notice we've got the measured move. The measured move here is that big two-legged move. That is definitely going to be what I would assume is the big objective. You combine that with the lows and the highs, it's not difficult to see this thing kind of extending up to that measured move. Okay. At the same time, though, it's important that you understand there's also quite a bit of overhead resistance just before we get to the measured move. I doubt those levels of resistance will stop the buyers from completing the measured move, but I would imagine they might be a bit of a thorn in our side, right? Maybe a pebble in your shoe as you go higher, right? So we just want to be careful about this area up overhead, right? Again, it's probably not going to be enough to stop the market if we do get a breakout, but be aware. If you look back at a 4-hour chart, whatever, there's a lot of previous tops up there that are just below that. Oh, there it is, that all-time high at 39.59 and a quarter. So believe it or not, the S&P staring down that all-time high here. But again, we got to make sure we do the breakout first. As I mentioned earlier, we cannot just trade breakouts. I know. If this is penny stocks, if I was trading cryptos, right, that would be something you could look for, right? When you have illiquid markets will work for trading these triangle breakouts. But for all the real markets out there, the ones that actually have bid and ask and actually have liquidity, you got to be careful, right, trading these breakouts. So, again, penny stocks, illiquid cryptos, all the low float stuff out there. There's not a lot of liquidity out there. Those patterns might work. Breakouts might work on kids markets, stuff like that, but not on the big markets, right? Not on the more liquid markets. So we have to get some proof, right? In order for me to buy the breakout here, I'm looking for ultimately two basic breakout patterns. My favorite one is this 1, 2, 3 breakout. Right? So we wait for that break higher. We don't buy the break higher. We don't buy the pullback either. We wait for it to go 1, 2, 3 breakout. I mark up that high. I mark up that low. And I buy the first pullback off the low of that channel. Yeah, I know. I wish there was a reliable way to buy that first pullback. Believe me, I do. But after almost 15 years of watching charts and trading with clients every day, I simply don't trade breakouts any longer, right? Not a reliable long-term strategy. If you want more consistency in your trading results, wait for that 1, 2, 3 breakout. That gives you proof. And think about it too. What it does is it creates that FOMO mindset. It creates that tension in the market, right? People don't want to miss that trade. You know what I'm saying? That's what makes it so reliable. Everybody sees the breakout and they go, oh shoot, I better get in this thing. And they want in on that first pullback. So much more consistent than the first pullback. Okay, so that's called a 1, 2, 3 breakout pattern into a first channel pullback, right? Hidden channel pullback. Another one of my favorites is called a 2-try breakout. And this is why you got to be aware of these areas overhead. So a 2-try breakout, let's just say, for example, the market opens up in Asia and this thing just rips higher, right? Good news is good news. The market loves it. Everybody loves stimulus, and the market rips higher. If it rips higher like this, got to be careful buying into these highs, right? I like the momentum of the market, but as we talked about in last night's newsletter, location becomes a problem. So if I'm worried about buying high, what's my favorite entry setup if I'm worried about buying high? Traps, baby, traps, right? I want to get that trap. Now, all I really need is that strong move up, that shallow pullback, that higher high in price, and then I can look for that trap. You can dramatically increase your odds of success, though, if you can find a hidden channel to incorporate on that entry. Okay, so be aware of that as this market runs higher. And then also to keep in mind too, it may just run up and start trading sideways up here, right? So just be aware of that. If at any point the market jumps and goes sideways, what do? We find levels of support below the range, and we combine those levels of support with what we call a failure setup to buy below the trading range, right? We basically wait for sellers to try to foolishly, again, like this one back here, we wait for those sellers to pull back. We let them get short, right? We don't try to pick the bottom of this move. Picking tops and bottoms is a rookie's game. We are more patient than that as professionals. We wait for those breakout sellers to get in, and we simply use their stop losses as gasoline, right, to run this thing back up to retest the high. So now we get a pretty good idea of how I'll be looking to trade this stuff here as we go into the overnight and, of course, into tomorrow's trading session. Again, I do want to remind you, I cover all the specific entry setups. I'm going over the best locations right now, but if you want more of the small details of how we trade together every morning in our trade room, you definitely want to grab that free trading course linked up in the upper right-hand corner. All right, we're looking good. So S&P, very, very excited for tomorrow's trading session. How about the Nasdaq? The Nasdaq is a little bit more of a curveball for us. You know the Nasdaq, right? It loves to keep us on our toes. That is a understatement, isn't it? Okay, what's going on with the Nasdaq right now? I think the most important thing about the Nasdaq is let's take a trip down memory lane and let's look left for a second. Because what's ultimately going on right on the Nasdaq, we had that big run yesterday, right? Biggest move in 4 months on the NQ. So we had that big move up in the Nasdaq yesterday, and it's basically a trading range with an overshoot of that range. So when I look at this Nasdaq chart right now, I see this. I see a trading range, a very bull market, obviously, from yesterday. I see the buyers got really aggressive overnight, right? They tried, but they couldn't do it, and they came right back into that range. Okay, so now here's the problem. Now we have a lot of what? Momentum, right, for the bears. Yes, it's still a bull market, but this is a range. And so how do we trade a range? In a bull market, we find levels of support below the range, and what do? We wait for price to get below the range. We wait for those bears to get short, right? And we focus on selling basically into their stop losses. But here's the challenge. This is going to be a very bear market if we get that nice deep pullback. Okay, that's a big problem for the buyers. I do expect buyers want to buy that dip. I would be surprised if we didn't see the buyers really work hard for it. But it's going to feel very bearish. And so we'll have to break out one of those nested failures to really make sure we protect ourselves on that, right, on that low. Another very important factor on this, right, is that this top, right, that top up there now really acts as resistance. And you almost can bank on the fact that there's going to be some channels coming down overhead. And we can be very careful if this market runs higher, because you'll notice in the chart tonight, I'm going to draw a couple trend lines across, and there's going to be a couple channels up here where you could bet that bears are going to be trying to again, we talked about this earlier. A lot of times, this what appears to be obviously good news becomes a sell the news moment. All right, don't ask me why. It's just the way the markets are. The conspiracy theorist inside of me says, right, the big players in the market say, no. Let's run it down here and then let's buy it back up, right? If you want me to go down that rabbit hole, we can talk more. We can talk more about that in a different video, right? Wrong channel. So, but that's what that is probably a lot of what's going on, right? So we may see this market shoot up and then right back down again. The reality, the bottom line is I've got to be careful, right, buying it as it goes higher. So when I go back to my chart now, and you can see that bull market up. You can see that trading range here, right? You can see it. There's the overshoot. And so now I'm marking up the amount above the range, putting it below the range, and that gives us a great area, that 12,621, 12,622 area. That's the good stuff right there. Right? That's the good stuff. That's where, if I have it my way tomorrow, we'll get down into that area, 1, 2, and right back up again, right back up into that range magnet. At the same time, when you look at this, if I zoom a bit closer on this now, at the same time, you can see that we've got what really looks like almost like a spiking channel, right? It's a range. It's a range here. It's a range. But this looks like a spiking channel, right? Spike down into a channel, right? And now, if you watch my newsletter every evening, like I know a lot of you guys do, or if you're a member of our trade room, you know spiking channels tell us what? What does a spiking channel always tell us to do? It tells us to sell the base of that channel, right? The first pullback, the base of that channel, right? That's where the shorts come in above those highs. What I did was I took it one level further and I said, all right, let's mark up those lows, because look at how well the highs fit. Like a glove, right? So that fits really well. And then one of the most important components of a range-bound market are to find the edges. So that 1289, 12899 half area there. So this is where you have to assume all of those, right? All of those sellers are going to be trying to get in. So that's going to be a challenge as it goes higher. Okay, this is like I said, Nasdaq's going to be a little tricky here for tomorrow. We'll know more, obviously, once these markets open up in Asia and we sort of see how the market reacts here. So if the market runs higher here, I really have to be careful being a buyer. I don't want to chase after it because, as you can see, there's a lot of levels of resistance. And I mean, come on, if you just looked at this chart right here, Is that a bull market right there? No, it's not. Right? That's a bear market. Now, obviously, there's more than just that. But the point I want to make here, though, is that there are going to be some bears here trying to call that sell the news, opportunity here. All right. So first of all, let's prep this both ways, right? What if we do get that pullback? No matter what, whether we go up and crash back down or we just simply head lower, all of this is very bearish right now. Yes, I do want to look for a long down here. Right? And it may break through it, and we may end up going lower because of it, right? But we'll cross that bridge once we get there. If we do get that run up and back down, or it simply runs lower here at the open, it's going to be very bearish at that time. Okay? This is exactly where a nested failure comes into play. We take out those lows. Really all I need is just to get in this green rectangle down here, right? Get me underneath that 704, 703.5 area. I'd love to get the weekend gap, the pendulum swing, not required, right? But I want to get underneath that low. So get underneath that low. All this momentum is bearish now. Great location, horrible momentum for a buy. So what do? We give the bears the benefit of the doubt, right? Let them kick up some dust down there. Let them try once, let them try twice. Once those bears have tried twice down here, where are their stops? Everybody's stops now are right above those highs, right? So that's the idea. We're looking for things to turn, and we can buy into those stop losses and literally use those stops, right? Like rocket fuel, right back up in that range. Because what is a range? A range is a magnet. Okay, balanced market, range bound market. Okay, so there's two ways to enter this trade. One of my favorite ways is off the trend line. Sometimes we don't get that trend line test. The other way, of course, right, is off of the break higher. So again, we call these nested failure patterns. They're just breakout failures. That's all they are. Okay. Then what you want to look for is you want to look for that run up, draw that new channel off those highs, off that low, and oftentimes these will come. Oftentimes these will pull right back into that sweet spot. Okay. So great setup pattern there. It's a failure into a first pullback combination. Okay, and these will oftentimes really rip. Let's say it does rip, right? If it really rips, if it really races higher, that's where traps come into play. Okay, because remember, at this point now, this thing could really rip, right? It runs down. The bears try once, try twice. We're buying the stops. We're using that. We're using those bear stop losses as fuel. The market races higher. You don't get that pullback right away, and what do? You don't chase after it. You wait for a trap. Okay, so just keep it in mind if we get that deep pullback here. All right. Now, at what point can I sell this market? Right, as it's going lower, at what point can I sell it? I can sell this market as long as they get down in this area and hold that pullback, right, and hold it. I get it. We're already pretty bearish right now, but again, I mean, it doesn't seem logical. Well, I guess logical might be the word. There's not much logical about these markets these days, right? But it doesn't seem likely that they're not going to see buyers, pitch a fit down there trying to get this thing back to retest the highs. So I would imagine when we get down that area, 1, 2, right? If those bears can hold this thing and blast, remember, it's not the strength of the leg down. It's the strength coming off the moving average. Look back here, right? It's not the strength of the leg down. It's the follow-up leg. See the follow-up leg? There's no juice there, right? There's no continuation. This move back down is probably just buyers, right, getting out of their positions. They see this market run up, they see it pull back, they see it fail to retest, and they get out, right? And of course, it collapses back down. But this is a big clue. If the bears if they really had this sucker, right, they would take this thing and run. I mean, we'd be halfway back to those lows from yesterday by now. So it's obvious the bears are not really in control, you know what I mean? But again, as we go lower, you got to get that follow-up go, right? I'm expecting bears, so bulls down here. I want to get that 1, 2, go. Really get me that jump off the moving average. Prove to me that you actually want this thing going lower. Then I'll mark that low, I'll mark that high, and again, the first test, right, is the best test off top of that channel. And again, right, we're talking about failure patterns, pullbacks, strength patterns, trap patterns as we rotate off of that high. If you want to see examples of those entry setups I'm talking about, make sure you grab that free course, right? It's all included in the free trading course here at School of Trade. Where would the bears be trying to go? They have a very big incentive to take control of this market because you can see all these lows back here are a mile away, right? So we're definitely looking for that push lower to hold, and it could be a pretty good day for the bears there for tomorrow. So we know how to trade the pullback. Obviously, stay out of the middle. Well, I guess not obviously, but stay out of the middle, right? Middle of the range, stay out of there. Now, here's where things are difficult, okay? Because as we go higher, can I buy this thing as we're going higher? Really, this is going to be one of those. This is one of those situations where you're going to have to kind of wait and see how the momentum looks as the market runs higher. The bottom line is, if I want to sell this area up top here, I'm going to have to use the same basic idea, a nested failure. Because again, this market's not a bear market. There is a lot of bear momentum, and it's easy to put yourself in the shoes of the sellers to think they're going to probably try to sell this thing. And with that news that just came out, the $1.9 trillion stimulus bill, this could be one of those situations where put on my conspiracy theorist hat on and say, this could be where all the big guys and gals, the whales in the market, right, people who actually control these markets, they may come in and literally pick the pockets of all the rookies who are just blindly buying the breakout. Right? They see good news. They think good news is good for the markets. They buy it. That is probably what will happen up there. If there is a sell-off at the top there, it'll be bigger players in the market probably trying to get it right down to those lows and then back up again. Right? They don't want to buy the high up here. They want to buy it down here. I won't go too far down the rabbit hole on that one. So as we go higher, how do I sell it? We're overall bullish. So I have to use one of those nested failures again. Right? I got to give the buyers the benefit of the doubt. Let them try once. Let them try twice. And again, once those buyers have tried twice now, with that range below acting as a magnet, with the buyers now fully invested, right? Fully in that move, now their stop losses become rocket fuel, right? They become gasoline now for that move back lower. And obviously, right, we want to sell either into that trend line, right? Sometimes you won't get that trend line to get hit. Sometimes it doesn't make that far, or into those stops. So a nested failure to sell back down again. Targets are great on that short because you got that pendulum swing in the weekend gap that makes for a great target on the other side of that rotation. And again, don't be surprised if it runs up 1, 2, ends up collapsing back down, and then we go 1, 2, and right back up again, right? That we could play that yo-yo game tomorrow here on this Nasdaq, which I am perfectly comfortable with, right? I would have no problem with that at all, right? I don't care what direction I trade in, as long as I have a good-looking setup and I understand momentum. Now, as we go higher, this is one of the harder parts for tomorrow. As we go higher, if I get a 1, 2, 3, probably not a good spot to buy. But if I can get a 1, 2, 3 trap, now we're talking. That's something I can get my hands on. All right. Again, a lot of this will have to do with how the market pushes higher. Does it really race higher here? Strong move up, shallow pullback, higher high, trap low. That's a good buy right there. If I can get a trap entry before we make it back up to retest that high, that's a good entry up there, right? It may not go forever. It may not keep going forever for you. But if you have enough momentum and you get that shallow pullback will drive everybody nuts. And as soon as it pulls back again, that tension, right? It'll create that FOMO environment. That's where the consistent profits come from. If you can try to participate in the market when there's a lot of, again, I use the word tension, right? Because there's this fear of missing out. There's this anxiety. I don't want to miss this. That's where the power of those setups come from. And again, we call these 2-try breakouts or 2-try traps, right, in our trade room. The next one's going to be what's kind of interesting, right? So for example, let's say we run up, strong move up here, we pull back and we blast, right? If I get a 1, 2, 3 blast through those highs, we're fine, right? We're fine. Mark that high, mark that low, right? And again, I'm buying the first test. The first test is always the best test. However, though, right? If we get a 1, 2, 3 going higher, this is a little bit different, right? That's a little bit different. Now, if I want to buy that pullback, what's my concern? Momentum is not my concern at that point. It's a very nice momentum move. What's my concern? Location. And if I'm worried about location, what's the best entry pattern? A trap, right? So the general idea is that 1, 2, 3. And by the way, it could be 1, 2, 3, mark that high, mark that low. And again, this is where we want to think that trap, right? You want to find traps as we go higher here, okay? If it just blasts right through it, there's no worries. But if all we get is that 1, 2, 3, and now we're trying to buy that breakout pattern, the exact specific entry technique I'll use will look more like this. It'll go up, pull back, it'll be 1, 2, and trap, and we go. So this is going to be probably one of the more difficult entries tomorrow morning as we go higher here, if they don't just rip the top off this thing. You know what I mean? Which they might do. So just keep in mind on that. We'll play that by ear once we get there tomorrow morning in the trade room. So got a pretty good idea of where this market needs to go and kind of what it needs to look like. And then as we go higher here, look at all the open space above. There's a ton of green grass above that, right above that high. So Nasdaq buyers are in for a treat if they can break out higher. Sellers also have a pretty nice cherry on top below. So it'll be interesting to see here what happens on the NQ4 tomorrow. All right, so be careful buying those highs on the Nasdaq tomorrow. I know that good news seems like it's an easy slam dunk, but not so fast. How about some gold? Let's grab some gold here. And as always, I appreciate you guys tuning in every evening and sticking around to watch this video. If you're here still watching right now, 35 minutes of this video right now, do me a favor, hit that like button for me. I hope you've subscribed to our YouTube channel by now. And I'll tell you, you are part of the 1% of the people who will be successful. If you've gone this far into this video, I can tell you are a serious trader. So in the comments section for me, hashtag 1%. Right? Hashtag all the way to the finish. Great to have you here still with me. You guys are the people I work hard for. So thank you so much for joining me. Now, on the gold here. What do we know about the gold? Let's take a step back here for a second, right? We had that big push up yesterday, right? That big push up yesterday. We had that trading range. And we talked about this, right? We talked about how whenever you have a trading range, what do, right? You want to buy, this is a bit different today, you want to buy support levels with failures below the range. And that's exactly what happened today. So pretty much par for the course on the gold. It wasn't as deep of a pullback as I was hoping for. But as you can see, though, we get that support trend line. There was a battle zone right there today. So bottom line is, if you followed last night's newsletter, you were prepared to buy that failure going back into that range. It is a trading range environment, right? It is a range-bound market. We have not successfully broken away from kind of the magnetic pull of that trading range. What I did was I marked up that low below the range. I projected that up to the high, and that's going to create some resistance. We call these pendulum swings. Remember, range-bound markets are balanced. The amount of the move below the range is oftentimes symmetrical or equal to the amount of the move above the range. We are right there right now. You'll also notice, too, that even though the buyers have definitely tried. The buyers tried very hard, but they haven't got that kind of 1, 2, see ya, right? They haven't got that breakout move yet. So we're definitely still kind of struggling with this range magnet. That's one of the most important parts kind of this chart right now. Yes, I do think this kind of spike in channel looks good, which is going to be another kind of wrinkle for tomorrow, or in the overnight, is as we go higher, right? How do we deal with the fact that we got this top of the channel up there? That should be pretty easy. We'll cover that in a second here. And then we've really got just one little guy up there at 39.2, and then a pretty big spot, a pretty big wide open space until that 17, we'll call it 1760 area there overhead. So we're definitely bullish, but we're range bound, right? We're range bound here. And so let's talk about if the market pulls back, because again, we got the ECB tomorrow morning. If I had to guess tomorrow, I would say gold early tomorrow has the potential to be a bee's nest. It has potential to be a real grindy market. It's just the way the markets react. The euro's the same way. Get the ECB meeting and the announcement tomorrow morning. That'll be around 8:30 Eastern time in that press conference to about 9:15. So just be careful with gold tomorrow early in the session, especially in the pre-market. Just be aware. If the gold keeps acting like this tomorrow, stay away from it. Hopefully we'll get this thing to break out of this little funk it was in today as was waiting for that COVID bill to be passed. So as we pull back here, what's the problem? right? I'd love to get this move lower here. We got a bunch of great levels of support down here, right? Get lows, weekend gap. And in all reality, guys, could you look at this as a spike in channel? And if it is a spike in channel, where do spike in channels tell us to buy? The base of that channel, right? So this is a great spot to get long. And if we get a nice deep pullback, I'll be looking to get long down there. But obviously the problem is momentum, right? Same problem we have in the Nasdaq. So as we go lower here, if we get down to these buy zones down here, the same issue, comes through. We know we want to buy down here, but again, momentum will be very difficult. So give the bears the benefit of the doubt. Let them try once, let them try twice, right? Trend line or buying the stops into that hidden channel, right? First pullback test. So keep your eyes on that at these lows, right? Bears try once, bears try twice. We're buying into those stop losses, using those stops as fuel. And of course, we're buying that first pullback, which is usually right around the same spot, right? That little failure into pullback combination. At the same time, if the market just simply rips higher here, how do you trade that? All that momentum, they're running back to those highs, lots of good momentum, but not a good location. How do you avoid the location problem? Traps, baby, right? Traps. So if the market does rip off of that low, and for whatever reason we don't get that little pullback, the pullback's very common, right, after a failure. You see an example back here, right? Go lower, failure, up into a pullback, right? Very, very common, that combination. Okay, so that is probably going to happen there. But if it doesn't, and it races higher here, right, look for that trap low to get in. And again, I apologize, my messy drawings right now. You're going to learn a lot more about all of these setups, specifically trap patterns, in that free course linked up. Grab the little info icon there in the upper right-hand corner and grab that free course. At the same time, though, if the bears come down, if they can hold that pullback and jump, right? If I can get underneath these lows and see those bears, right, hold that pullback, we might get one of these where it, kind of runs down like that with like a 1, 2, 3, reversal like that. That's fine. I will still be looking for that 1, 2 back up again just because of location. So we have to get, no matter what, we have to get down into those lows here. We've got to get those bears showing us they mean business, holding that pullback. Once you take out that low, and that's where all the buyers want to buy, and the bears can stare those buyers down and say, no, my market, right? Take that low and run it lower. Remember, it doesn't matter the strength of the first pullback. It's irrelevant. All that matters is how the market responds on the pullback to the moving average. That's the only thing that really matters here, okay? If they really jump off it, now I can mark up that low, mark up that high, and again, without sounding like a broken record, right, the first test is the best test, right? Buyer failure, seller pullback, seller strength, bear, right, bull traps, right, off of the high of that channel. I'll show you lots of examples of those as part of the free trading course. All right, so rotating, going lower, and then where do we think the bears want to go? If the bears do take control, you've got that main low down there. It looks lonely, doesn't it? 1673.4, that low is lonely. He needs a friend, right? So the bears would love to come down and buddy up with that 1673.4. That's pretty easy to see there, right, where those bears could take it. And then as we go higher, the big thing right now is we don't have any proof of a breakout. Right, as we go higher here, I can, of course, look to sell this high. I love to use pendulum swings. Pendulum swings are fantastic levels of resistance. So as we go higher here, great location to get short, but horrible momentum, right? It all comes down to those two aspects, right? Location and momentum. Great location to want to sell short, right? Below, above, great spot to sell short. Momentum, knows the problem. So what do you do when you're going against the trend and you want to use that range as a magnet to get short? You let the buyers dig their own grave, right? You do. You let the buyers try once, you let them try twice. What I like in this scenario is to get that trap high, right? Just make it official, a crown reversal pattern off of that high. Same idea, buyers trying once, buyers trying twice. I would really like to get, right, that trap high if possible. Now, there's a lot of variations of these reversals, right? These reversals come in lots of different shapes and sizes. Sometimes they'll go up, the buyers will pull back once, we'll start grinding lower, right? Mark up that low, mark up that high, find your traps, and traps look like that too. So you'll see, that's kind of the same idea, right? Buyers try once, buyers try twice, right? And right? Sell right there. So just some food for thought there. Again, there's a lot of different shapes and sizes of these reversal patterns. We'll obviously cover the smaller details of that stuff tomorrow morning in our trade room. And then let's face it, the buyers are halfway there right now. They look pretty strong right now. Can they hold the pullback? Can they hold that pullback and blast with a 1, 2, 3 reversal or 1, 2, 3 breakout? And I'll tell you, if we get enough strength off that move, if we get enough strength coming off that moving average, I don't care about that trend line any longer, right? So let's just get rid of that channel here for a moment, because if we do get this up, pull back, and go, now we have that tension in the market. Now we have that FOMO in the market. Now we can go out, mark that high, mark that low, and we can get in with pretty much any entry pattern that we see at that low, right? It's a bear failure like this off the low, right? It's a pullback off the low, right? So again, we'll go over more details of that in the free trading course or tomorrow morning in our trade room. But that's the general idea of where I'll be looking. Or maybe it just rips higher here. We get that shallow pullback, that higher high, and we can look for traps, right? You get added bonuses for adding on a hidden channel. Always, 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 always one of my favorites. All right, so strong move up, shallow pullback off the moving average, higher high in price, creates that tension in the market. Nobody wants to miss out on the next move, and that trap low is the key to success on that. Okay, don't forget 39.2, and if it breaks to that area, maybe 1758 might be a little too much for tomorrow, but who knows? Anything is possible in the markets we're dealing with these days. So now I think we got a pretty good plan here of attack. We know how to buy it. We know how to sell it. We know whether or not this is a YOLO everything, right? Go back to the all-time highs, or if this is going to be a dud for tomorrow. Either way, you're ready to capitalize on it. Now, speaking of tomorrow, every morning, 8 o'clock Eastern time, we're going to trade this stuff together. If you're looking for more consistent results in your trading, there's no better place to get those than with me every day in our trade room, right? We prep our charts, we keep our mindset disciplined, I help all my clients, right, understand what's happening, and I'm always hunting for the best setups every day with all of our clients in our trade room. Getting registered as a member is really easy. I'll put a big button for you below the video tonight on the trading blog. So if you're on the blog right now at Sideways Markets, there'll be a big button for you below me on the video. And then if you're on YouTube right now, grab the link in the description of this YouTube video and come out and join me every morning, 8 o'clock, Monday through Friday in our trade room. We will have a front row seat for the fireworks here on this post-COVID stimulus bill on Thursday morning. Don't be afraid to call the office. I'm always here to help if you guys have any questions. I can also use live chat on the left, live chat on the right, so don't be afraid to reach out. And I hope by now you guys hit that like button, that thumbs up button, YouTube channel. Make sure you subscribe to our YouTube channel, and don't be afraid to pass this video on to some other trading friends out there. Everybody can benefit from having more knowledge about how to trade. All right, guys, thank you so much for tuning in. Always appreciate you all sticking around to the end. So have a great rest of your evening out there. I'll see you tomorrow, hopefully. If not tomorrow morning, tomorrow evening, we'll do it again. Same time, same place. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.